Good morning, everybody. You're welcome to Market Structure Training, Volume 19, Series 3. Okay, so we are going to be, proceeding from where we stopped in the last call. The last call we had was on market structure was on the 3rd of September, 2022. Yeah, and then we discussed, all of this, and then we ended it somewhere. And immediately afterwards, yeah, so there were 8 opportunities you could have taken to the downside on that. So we're just going to continue from there. All right. So, and then this is, yeah, so we discussed all of this sell down. All right. So let us proceed. Okay. So maybe this call, we can look for buy opportunities to the upside, since the first series was, we looking for buy opportunities to the upside to capture the equal highs that was here. Just a quick recap of, what we have been doing. All right, there was this equal highs we had here. That was, and then the market opened January 3rd, right? And then we have this, we're able to discuss buy opportunities, how you could have taken, or we could have taken buy opportunities to the upside. Yes, to the upside, and then how many buy opportunities were there, and then we, got to know that the structure is going to the downside. So the order flow on a larger time frame is bearish, right? So if you're taking buys, it's going to be short-term buy, and then look for, sell opportunities down. So the series 1, we covered the buy, opportunities. Series 2, we discussed the sell opportunities to the downside, and now series 3, we will be looking at this opportunity, how we could have, taken buy opportunities in this area to the upside. And let's see how far we can go until 11:30 my time. Okay, so you can see down here, this time zone, I'm using London. So it's the same thing with Lagos. So we'll be looking at this time. So 11:30, we should be rounding up. Okay. Yes, so we discussed this to the upside and then to the downside. So we're going to continue from there. So permit me to use the replay button, and then so we can just, yeah. Okay. All right. So since we are backtesting EURUSD, with respect to market structure, that means the first thing you need to understand is what is the structure of the market. And even after understanding or getting to know what the structure of the market is, you also need to know what the current structure is. Okay, we have like the major structure, that is the overall structure. What is it doing to the downside? Order flow is to the downside, right? Now that is you looking at it like at how do I put it now? At a whole, like looking at it all together, EU is going to the downside. But now you having this information is so you can be able to, position yourself for long-term trading, right? But now, even as EU is going to the downside, whoever tried to take a sell here must have taken a loss, right? Took a sell here must have taken a loss. Sell here must have taken a loss. And then sell here must have taken a loss. So yes, price is bearish. But does that mean you just place a sell at any point in time? You just wake up, just see EU is selling. Let me just enter anywhere. No, that's very wrong to do, right? So even with price being overall bearish, there are still buy opportunities. That is what make, that is what completes this market structure, because even though it's bearish, we have some moments where price is retracing, going against the structure, going against what the main structure. And this is what gives us the lower lows and then the lower highs and then the lower lows and the lower highs. In the last call, I told you guys that some people need to be courageous enough to trade against the structure. When we were learning during the early, stage of learning, phase, we used to hear that, the trend is your friend, only trade with the trend and all of that, right? Yes. So if you are only going to be trading with the trend, that means as price is buying, you're just waiting. As price is buying, you're just waiting. As price is buying, you're just waiting. But it gets to a point where you advance and then you can, trade against the trend because you know what's up, you know what you are doing. You understand? Yes. So that is, some people buy against the trend of the market, okay, and they don't have two heads, right? So if they can do it, we can do it also. Cool. Yes. So we discussed all of this sell down. Now, what is the current, structure range here? We have this low and then this high, and then we have this low, right? And then we have this lower high. We discussed the price, coming into this imbalance here. Price get into the second imbalance. Price got there, and then we had distribution, and then price sold, and then we were able to see how many sell opportunities we could have taken with respect to structure in this area. Okay, you can go back to is in the library group. Okay, it's here. This is where we discussed all of that sell opportunities to the downside. You can check it out here if you have not, like if you're just joining and you've not watched the first and second. Okay, just go and watch it. Okay, this one is about 1 hour 10 minutes videos. Okay, yes. Okay, so now we're going to be looking at buy opportunities to the upside. So now, first on the daily time frame, we can see that price as what giving us what lower low, lower high, and then price as giving us a new lower low. All right, so market structure, like retail market structure will be after a lower low, price should give a lower high, and then after a lower high, just following the same blueprint over and over and over and over again, lower lows, lower highs, lower lows, lower highs, right? So if we're going to be applying that, we have this lower low, lower high, and then lower low, right? There's something I always say, I still said it in the group this morning, right? Like you cannot predict the extent to which a new low can be set in a bearish market, right? It could continue to drop, right? If you had thought this was the lowest low price to get to and reject, I mean, good for you, you caught that trade. But look at this in this area here now. Price gave us this lower low, yeah, retraced. Now, if you thought this was a low that will lead into a lower high, you were wrong, right? And then it happened here again, and then we had bullish day, and then if you thought that was it again, you were wrong. And then we had it here, and then you were, right, and then price dropped. Yeah, again, if you thought this was the low, you were wrong, and then yeah, you were right. You understand? So you would be, missing it at some point. It cannot be perfect. It cannot be 100%. Okay, you will get it at times. You won't get it at times. Okay, you just have to make sure that you are not over leveraging. Okay, because if you risk all your accounts on this now, and then when this presents itself, there's no money to trade again. Okay. Yes, you want to be in this long term. All right. So yes, price has given us a lower low. All right. So now how do we buy? That's one major question. So now, yeah, coach, I've seen that EURUSD has given me a lower low on the daily time frame. What do I do next? What do I do next? Should I just buy immediately daily candle closes? Right. Because my broker, daily candle closes at 9:59, yes, because Kenya is 2 hours ahead of Nigeria, right? So 9:59 is 11:59, right? So 12 in the morning Kenya time, which is 10 o'clock, that is when daily candle opens for me, right, on my broker. Understand? And then you can see, so if the daily candle closed and I just bought immediately, like, oh, lower low has been set, I want to buy into lower high, not waiting for any confirmation, not waiting for anything. Who can tell me one major challenge you're going to have? You can tell me what would be your major challenge if you just buy once the candle closes, bam, that's a lower low. You didn't wait for any confirmation. What is going to be your major challenge? One major challenge. You can tell me. Very simple. Yes, drawdown. Aside from the drawdown, what do you think would be your challenge when you just buy? What do you think would be your challenge? No, it might not even be a drawdown. Exactly. Stop loss. Stop loss. Exactly. Stop loss. That's it. Where do you put your stop loss? Where? Okay, you just buy immediately. Okay, I'm just buying once it closes. Yeah, 10 pips, 20 pips. That is now going to be on probability. I feel price should not go below 10 pips. I feel price should not go below 20 pips. Now, if price has gotten to 10 pips drawdown, you're not in 10 pip drawdown, you decide to increase it to 20, it will not get to 20. Price will not get to 20 pips. Let me put it to 20 pips. Now price is at 15, is at 17 pip drawdown. Okay, let me put it at 30. Okay, 30 now. Price will not get to 30 pips. Now you are just beginning to what? Gamble. You're just based on probability. And do you know what happens? Because you've already calculated that it's going to be 10 pip stop loss. And then you've used a risk that is maybe $100 for 10 pip. Now you were initially going to risk $100. That you increased it 10 more pip, that is $200 risk. You increased it 10 more pip again, making 30, that is $300 risk. It's getting too much now. Now you've risked 3 trades on one because you just decided to get in. One major challenge is going to be what? Stop loss. Where do you put your stop loss? That is why you wait. Many people that trade that way don't put stop loss. I mean, good for them, right? They might have back tested it, and maybe it's working for them, right? I wouldn't say it's not, right? Because Forex can be, we have traders, we've seen traders, we see them on Instagram, we know some of them that are profitable, from a lifestyle and then the things they show us, and we will not say, it's not our own work to condemn or to condemn, say, okay, this person is not making money, this person is not making money. I mean, if they do it and they are okay with it and they make money from it, I mean, then good for them, right? It's not it's not a problem, right? So if there are people that do it, you understand, maybe that's the way they trade. So I would not condemn them and say it's wrong. Understand? Because what might be wrong to me is actually right for somebody else. And then what I feel is even perfect, someone will look at it and be like, man, this is rubbish. You understand? So we all have our own, distinguished areas, right? If people do it and they're profitable, good for them. But for me, I'm just going to enter right here. I mean, where will I put the stop loss? No, I won't do that. So what I would do is I would wait for what? Extra confirmation. Okay, you guys type extra confirmation in the chat box. Okay, wait for extra confirmation. Okay, type it, extra confirmation. That is what you're going to do. So in a situation like this, if you're asking me, what do you do? The answer is extra confirmation. Okay, yes, price has sold, price is down. What do I do next? Chill. Okay, chill. CHILL. Wait for extra confirmations. Okay, and then how do you get extra confirmations? Lower time frames, right? Because you cannot get extra confirmation on the daily. Okay, you can, but it's going to take a couple of days. It's going to take a couple of days for you to see that, and then you might have missed out on the move already. So what do? You wait for extra confirmations, and then you can get that in lower time frames. If you're asking me what time frames are, I mean, we're just going to scale through lower time frames. Okay, 4 hours, 1 hour, 15 minutes, just down. Anything below the daily time frame is extra confirmation for me. So now we have this. Again, I cannot go below 15 minutes. I've told you guys why, right? Because this data is this is January 28th. So TradingView, I cannot use the replay to how do I put it? There's no 5 minutes data, all the way back to January. So if I click 5 minutes now, TradingView is going to say you cannot go back that far in time. So they just transfer me back to present. So we're going to stop at 15 minutes. Okay, so now let's go to 15 minutes. What do we have? What do we have? Okay, I see it now. All right. So now all of this area now is, that daily. So we are waiting for extra confirmations. And by extra confirmations, what do I mean by that? You understand? We're just chilling. We are waiting to see if there is any break of structure telling us that, okay, probably the daily time frame is about to what? Begin its retracement, right? So proof that a higher time frame is most likely, going to start retracing, you're going to see what? A break of structure or a structure shift on a much more lower time frame. So that's giving you a telltale sign now that, okay, you know what? I'm just going to, buy this because now I have the structure shift. But let's assume you had gotten in immediately the daily candle closed. Let's see where you would have, let's see. Okay, so the daily candle closed. This was where price created this lower low, right? This So this was the close. Yeah. All right. So let's go back to the 15 minutes. How many pip drawdown would you have experienced if you are taking this just right? Okay, this is, you would have entered here. Okay, so from this area to this area, that's about a 21 pip drawdown. That is you just buying immediately the daily candle closed, telling yourself that, okay, you know what, that's the last candle, it's going to start retracing from there. You understand? So I mean, and then 21 pips is still okay. You know, I like to do 30 pips stop loss, you know, so 21 pips, but then no confirmation, nothing. I just got in. You know, so now extra confirmations. This is what I mean by extra confirmations. You're waiting for structure shift. Some of you can see it already. Some of you already see the entry already. You know, but for those of you that do not see it, I'm going to walk you through where the entry can be. Some of you already know what's up here. Okay, so now you have to wait a day more in order to get your extra confirmations, right? And then what do we see on the 15 minutes time frame? We're going to be monitoring structure in that area, right? And then we can see our price give us this low, give us this lower high, give us this lower low, give us this lower high, right? And then this failed to create what? A new lower low. And then so this now becomes our new lower high, yeah? And then this our lower low price give us this lower low down here. Now on a much more lower time frame, maybe the 5 minutes, looking at this, you know, area, I can see a break of structure here, and then you could have gotten in on this candle with your stop loss here. But then we cannot go back that far in 5 minutes. So I'm just going to work with the 15 minutes data. Okay, so now we have this lower low, boom. So now price is giving us lower low, lower high, lower low, lower high, lower low. Now you want to buy, but you do not have your bullish confirmation yet. Price is still bearish. Okay, I need to wait more. I just need to wait. Okay, imagine price. This is, you know, 27. You have to just wait all the way to like 28. That is 27, 11, 30 in the morning, 28, 1. That's about a day, a whole day. You have to wait, you know, for the setup to form. I mean, patience is good, right? And then we can see, what do we observe? So we are waiting for any break of structure we can find. I can see one here, right? You can see, boom, we had this break of structure to the upside. So price broke structure. Now I have what? Bullish, you know, market has changed from being a bearish market to a bullish market. So now we can say that, okay, I think the daily is about to start buying, because number one, we've extended we've extended way down on the daily time frame. Price has created a lot of imbalance to the upside. So it should at some point begin to feel those imbalances, right? Again, the analysis will not be 100%. It can be, you can analyze it perfectly and then place a buy, and then this still happens to you. It's part of the business. Okay, we take is every business is out there, you know, take losses. Some might be small, some might be big. Some loss could even make the company to, or that business to just go bankrupt, and then they just pack up. It depends on how, you know, they manage their risk, right? Because risk is always a very important factor that you cannot do it when you are in a business. And then Forex is a business. So when you take losses, it's part of, you know, the business. But then again, every business out there, what do they try to do? Minimize risk, maximize reward. Same thing, Forex. Try to reduce your risk, you know, and then maximize your reward. How do you reduce your risk? Waiting for higher probability trade setups. Right? Don't just jump into trade. Don't just jump into trade. Wait for confirmations. Okay. Now we can see we have this for structure shift. Now we have this as the higher high, and then we have this as the low. Okay, this is my entire range. All right. What can we see? What can we see here? I can see this area. Let me see something quickly. I want to check. Boom. Yeah, that's the entry for me. That would have been the entry for me. What can I see? Price has broken structure to the upside. Now I have this as my what? Top range. Okay. No, this is my down range. Sorry. So I have this as my down range, and then this becomes my what? My top range, right? Okay. So what can I see at discount areas? Because I'm looking to buy at what? Discount areas. What is discount? Okay, anywhere below what? Anywhere below 50%, okay, is discount for me. And as you can see, this is 50%. So anything below that is where I'm looking to buy, right? So check. Okay. So now, what can we see at discount? First, I can see this liquidity. Okay, all of this liquidity, right? Everything got swept. So I can just put this here, liquidity, and got swept. All right, I have this candle that finally took out all the liquidity in this area, right? This very last low, this candle. And what can you see? This candle does not have a wick to the upside. So I would have targeted this candle for my entry here. So this would have been the mitigation candle for me. And then mitigation happened in this area. So if I was to trade this entry here, if the stop loss is below 30 pips, good for me. Perfect. This is entry would be at, I like to play 80 level. So let's see. I would have actually missed out on this trade. Now I'm being honest with you guys. I would have missed out on this because you can see I like to play, 80 levels and all. Boom. If I was playing the mitigation candle, my entry would have been at 80 level. And then my stop loss would just be, this is 16.6. I would run it up to 17 pip for me. So that was going to be 17 pip stop loss. And then this is how I would have traded it. And then 1 to 3 weeks to reward. Okay, so I'm not lying. I would have missed out on this trade. Okay, because this very close, then peel me in. But then if you don't do all of those numbers, you just get in at open. I mean, you got filled, good for you. Stop loss, down here, 17 pip stop loss. And then, 1 to 3, amazing. You made money from this. As you can see, now you've waited for the extra confirmation. I should shed more light on mitigation. Really, the video is in phase 1. You're taking us back. You're taking us way back. Okay. Taking us way back. Just watch the video in phase 1, okay? All right, but in a very short explanation, this is the very last candle that swept this liquidity, right? So I'm assuming that there are orders in this candle that need to be closed, right? And then we had this big push up, and then price, my money comes back to close the position, and then we have bullish price action, right? Yeah, so that is just a short explanation for it. And then you can see it played out perfectly. Now this got activated when 15:30. 15:30 is 3 hours into 15:30. That is 2 hours into New York Open, right? So you're still trading in the session, right? You still caught a trade during New York session. You're not trading outside the session, right? So this is still a very good trade. All right, that is it. And now, so this is one, way, and then price did not come back there, right? I'm not sure price came back there. So this is going to be our first entry to go up. All right, and then let's remove all of this writing quickly. So we have a breaker structure now. All right, and then to the upside. Now, if you do not want to play the imbalance, the institutional mitigation candle, another way you could have played it, is what? We have what? Can you see? We have this imbalance in price in this area. You can see this imbalance, yeah? Exactly. You could have actually traded it that way also. Okay. When price, we have this, imbalance from here, and then we have this imbalance here. So from this candle, this first candle, and then the second candle that actually created the imbalance, and then the third candle, those are the 3 candles that, make up an imbalance, right? A complete imbalance. It has a wick to the left side, a wick to the right side, and then the main candle in the middle should have that, inefficiency, right? And then that is where you are targeting, you want to have a trade from. So if you wanted to play the imbalance, it is still at discount. All right, so maybe you want to play 50% of the imbalance. All right, maybe something like this. I like to have my own with bank numbers. Okay, that is the 50 level would have been the entry for me. Since I'm playing the imbalance, my stop loss would just go below the first candle, 14 pip stop loss. This is 14.4. If I round it up to 14, yes, 14 pip stop loss, then I'm in already. So I could have traded it this way. If I was trading it this way, I'd have entered, I'd have caught it. If I was trading the mitigation candle, I'd have actually played 80 and it'd have missed me. Okay, so yes. And then price, rallied all the way to the upside. So now that's the first buy opportunity. You were more conservative, you were more patient than the person that just bought and was anticipating that, okay, it should not go below 10 pips. And our price is 10 pips. Okay, I'm going to increase it to 20 pips. And then if it gets there eventually, okay, I'm going to increase it to 30 pips. The difference between the two of you, first, the similarities is that you guys are both going to take a loss. No cap. You guys take a loss if the trade doesn't go in your anticipated direction. But the difference is you have a defined risk already. You waited for extra confirmation. You have a defined risk, your stop loss. You know where you shouldn't get to if price is going to go up, because there have been some previous price action that explains what might happen in the future. Unlike entering immediately at the daily candle close, there is no information yet for me. You understand? I'm just entering and then anticipating it should not go below. But seeing all of this, I have informations, and now with that information, I know where my stop loss should be, and price should not get there if he wants to go up. I mean, he can and then still reverse up, but it shouldn't get there. You see the difference now? And then you have an agreed stop loss already. If it goes below this trade is not valid for me anymore. Understand? And then you take your loss and then you're out. And then the other person keeps increasing. And then you that have a defined risk, you that waited for extra confirmation, can also be that person that entered without a defined risk. Because yes, you have your defined risk, but you can also choose to act like that person. You've already put it at 14 pips. It's coming down. Maybe will not get here. And then you increase it all the way down here. And then maybe you should not get, and then you increase it all the way down here. So automatically you guys have become the same thing. You understand? So yes, you actually waited for extra confirmation, but you ended up acting the same way like person A did. Okay. All right. So now price is going up, price is buying. We have what? We go back to the daily time frame now. Do we have, where do we feel price can get to, okay, before it begins to reject, right? Now, we are going to be assuming that today is, January 31st. Okay, so we do not know what is going to happen tomorrow. Okay, we don't know what candle is going to print tomorrow. Okay, but we know, we've seen it. I showed you guys in the beginning of the call how this bought up. But let's assume we are presently, January 31st. There's no way we would have known what happened tomorrow. But then you can use the higher time frame, directional buyers, to predict and tell where price might get to if you're buying. Remember, you're going against the structure. But then where do you think price might get to? Understand? Check the daily time frame, the bigger time frame where you started your analysis. You have to go back there. Even when you've entered a trade, you still have to go back to what? Where it all started from. Okay, now I'm back to the daily. What am I saying? Where do I think price can get to? Okay, I'm seeing this imbalance in price. Okay, I can see this candle that's for liquidity. So I'm beginning to see some targets that price might, be heading towards. Okay, what do I mean? Check it out. See, first one, I can see this imbalance here. Okay, so price might get here. Okay, remember we had our entry way down. Very, very good entry. What other things do we see again? I can see this liquidity, yeah. Now got swept. Now what candle swept it? This candle. So I have my mitigation candle here. All right, everything is beginning to look cool. Above the mitigation candle, what can I see? I can see imbalances. Oh, maybe, because it is always going to be maybe. Okay, I want you guys to keep that back of your mind. It is always going to be in probabilities. That you marked it out doesn't mean it's going to play out. No, price can just come up, buy a little, and continue to drop. So it is always based on probabilities. All right, so maybe price will get to the first imbalance, and then it did. So if you were going to swing trade this is how you can just continue to be in a trade. You've made your 1 to 3, and then just keep holding and keep buying. And then if you get another opportunity the next day and price is still showing you bullish price action, take it. Okay, take it. Because you have a bigger time frame bias. Until price has violated that completely, that is when your bias should change. You understand? Okay, now going back to the 15 minutes, we've been able to highlight all of this now on the bigger time frame, right? So now we go back to 15 minutes and then let's see. So now we had a buy. This is all of that area. This is the daily imbalance. This is the daily indication candle. And then this is that daily imbalance also. Okay, imagine. So you took a very nice buy from here. Boom, all the way to the upside. If you were targeting the first daily imbalance, that's a 1 to 7 for you. You made your 1 to 3 stop loss to break even. Did you get 1 to 3? 1 to 3 was here. Okay, 1 to 3 was here. So price played around a little, came up, you were in profit, came back down, back in loss, came up, close to 1 to 3, came down, and then boom, all the way to the upside. Now, me personally, as price was here, in this high to 1 to 3, I would have gone break even. And as you can see, price did not take me out. So it would just be me, profits reducing, and then seeing how the profit is reducing, and be like, maybe it's going to take me out at break even. Let's see. I mean, you can do anything you want to do here. You can, if you don't want to wait for 1 to 3, you can take profits, depend on you, right? For me, I'll just go break even. All right, and then see what happens. And you can see came back up. Now I want to discuss this area also because I'm seeing another buy opportunity in this area. So let's assume you missed out on this. Okay, fine, you missed out on this one. You were not available. You missed out on this trade. Was there another opportunity? Of course there was. There was another opportunity. Yes, there is another opportunity. I see it. Do you see it? Do you see it? I would. You guys see it? Do you see it? Because I see it. I can see the opportunity. Can you guys see it? Yes, that's one person. Really? Yes, clearly. Yes, sir. Yes. Now everybody's saying it. That's good. Yeah. So the other opportunity is this area. Okay. Now, if we go to the bigger time frame, it's going to be very clear. Yes, sir, you're right. I can see. Yes, so you're right. The first 2 ways you could have played this, 2 ways, right? You could have played this one. If you go to the 30 minutes, the range is from this low, right? This low now to this high. That's a new range. Okay, that's a new trading window opportunity, right? You're going to be looking to buy at what discount? What do we have at discount? First, I can see the smart money cube in form of an institutional cube. And then what is at the front of it? I can see an imbalance there. Oh, when is this activating? 11:30 in the morning. As we're still in the London period, but a little bit outside the Q zone, but then still played out, right? And you see, boom, got in, and then price just, I'm sure this might be news on 31st January, 1:30. There's always a news that comes out by 1:30. 1:30 is a major news, I've forgotten. 1:30 news on card. There is one that comes out 1:30. There's the other one that comes out by 7 o'clock. Is it either NFP or FOMC? Either of the two. I know it's 1:30 and then 7 o'clock. Yes. So I don't know which one, but I know it's one of the two. Okay. Or you want us to check? And let's quickly check. Forex Factory, quickly go to calendar. I'm just going to go back to January, May, April, February, January 31st. They don't have the data. Why is it like this? Maybe there's no news. Maybe there was price just bought at 1:30. He just bought because from here, I don't know if they used to delete past data on okay, more. Oh, perfect. 31st. On that day, we only have USD card news, and I was at 3:45 p.m. I don't know if they've deleted it. I don't know. All right. Let me check something quickly. January. Oh, that was on Monday. Okay, no. All right, but we had the move. You can see big price action to the upside. So now, how could you have traded this? You could have played the imbalance or played what the institutional cube, right? Anyone you played would have actually given you what a very nice trade. So if you wanted playing the cube, that is the smart money cube in this area, that is open of the smart money cube, could have gotten in there. Stop loss would just go down. Okay, stop loss can come below this low because the idea is the smart money cube should serve as support for price, right? So you can put the stop loss down here, or to be very safe, you can put it down here. But if you're playing the imbalance, right? Playing the imbalance, I like to just put the stop loss at the first candle, that the low of the first candle that forms the imbalance, right? So if you're playing can you see they're all lining up in the same place? So even if you took the trade based on smart money cube, or you took the trade based on imbalance, same thing. So two of you had a very good entry, right? And then going to the 15 minutes, that was it. Stop loss can just go below the low. So back to the 30 minutes, we're going to trade this. So if I'm playing the feel of the imbalance, okay, so let me see, 30. I would probably go for 20 level. Yes, that lines up with the open of the smart money cube. This is what I would have actually played because I'm seeing the confluence. Okay, and then stop loss will just go this low. Yeah, this one has about 7.9. That is 8 pip stop loss for me. And then boom, I was the second entry to go up. Okay, now have we gotten to the daily imbalance yet? No, we've not gotten to the daily imbalance yet. We're still approaching it. All right, so but then that day, was it the same trading day? This was on the 31st, 12 o'clock, and then boom, this was 20. That's 8 p.m. So it was still that same day, price got there. And so price has filled this imbalance. Price has started coming into the imbalance, and then we just monitor price action in that area. Okay, because we still have higher time frame. This is one for us. This is the second one. In case price breaks this one, we can begin to now anticipate, okay, I think price is coming for this one. Do we have liquidity? Definitely we have liquidity. See all of this. Boom, this is just money sitting down in form of a trend line. And then some people might have actually done something like this. Can you see how smart money can be very fun? All right, and then started seeing this big rejection in price. I'm like, oh, this trend line is going to hold, man. Sheesh. Let's see what happened. Let's see how far the trend line went. Okay, that's it. So trend actually played out. You can see played out. I mean, if you are taking it, the trend line trader would have actually made how many pips? Roughly 25 pip, right? So I mean, still good, 25 pip, but then trading trend line, where do my stop loss go to? That is a major question for me. Where do I put stop loss? Where? Yeah, I don't know. So, but then you can see smart money kind of tricked, retail traders to go in thinking the trend is going to hold, and then boom, it just swept it, went up, and then let's see what happened in this here. So we go back to the 15 minutes time frame. Okay, and then what do we have? So price filled the IPA, right? The imbalance came into it, rejected, and then went back up. Did this close above? I'm not sure. Yes. It did. Price closed above, right? So we had a break of structure to the upside. So this was now not really a break of structure, continuation of the uptrend. Higher high, high low, and then we had this higher high, right? Now going back to the candlestick. Yes, so we have this this higher high now, and then price is retracing down. The whole range for me would have actually been, this range here, and then this range up here. Now, like I said, they don't have to do what we want every time. You can see price just played this imbalance, and then what happened? Left. Okay, we also had imbalance at discount, but they didn't come here. This would have actually been good. This one would have been better, right? Because this is exactly at discount. So I would have actually been looking to play this one other than this one. And this happened when 6:45 a.m. That is before London session, right? And then we had 7 o'clock. That was the session that opens before London session, which is the Germany. Is it Germany? Germany, right? I think it's Germany. Frankfurt. Let me check quickly. Okay, so I'm going to use London time here. So 7 o'clock we have Germany. Yeah, so Germany opens 7 a.m. in the morning, an hour before London session begins. So that was the move. So smart money bought up and then rejected price from there. So if you were waiting for this one, how we missed out on this one? Okay, we missed out because this would have actually been the play. Since you're playing the imbalance, entry would be, this is 30. It's 20 inside. 20 is down, so I could just probably go for 30. Yes, 30. And that's a zero level also. And then stop loss, we just go. This is the first candle, and then down here. About 7 pips stop loss. Yeah, we missed out on this one. The price come back down. So even as price is way up here, there's no way you will still be having the limits here. As me personally, I would have deleted it. Okay, because even if this activates down here, it's not a winning trade for me. I mean, it played out, but I mean, this is where I wanted it to happen. Not when price is gone and it's not coming back down. You still have the limits and activate you, and that goes your way. Understand? But then this is where you wanted the move, right? You have to be, you know, very disciplined. It doesn't give me, I delete the limit. Okay. All right, so this one did not fill us in. Okay, and then we had 8 o'clock was yeah, so we had 8 o'clock, that was London open. So London opened, yeah, imbalance has been filled completely, price traded through it, and then you're going to be monitoring price action in this area, right? Did it present a sell opportunity? Yes, it did. All right, but let's see. Okay, so we have this high, and then we had this low, and then price gave us this this higher high. I'm sure maybe on a much more smaller time frame, this would have actually broken structure. Yes, but I cannot go back to, let me see, 10 minutes. I don't want to go back to 5 minutes. They won't. Or should we check if we're going to have 5 minutes? Because we've already gone far. This is February already. Let's see. Let's try. I want to go. Oh, we cannot go back that far. So let's go back. We can't go back to 5 minutes. Sorry. So we have to just go back to where are we? Yeah, I think we're here. So let's go back to 15 minutes. Okay. And then this is where we are. Yeah. So now we missed out on this buy, but remember we've had like 2 amazing buy opportunities already. So if you were risking your 1 to 3, you know, you made 6. Let's just say you're going for 1 to 3. You made 6 here, you made 3 here, you made 3 here. You know, that's 1 to 6. But if you were extending, obviously you made more than 1 to 6, right? And then in this area, what would I have done? Okay, first go to the daily. All right. I'm going to go to the daily and then measure. Okay, you go to daily and then you measure from year to year. Have we gotten to 50%? No. We have not gotten to 50%. So should we be taking sales below premium? No. So that way, this loss could have saved us. You guys see it now? You could just mark it out and then just be on the sideline watching. But then you want to trade at what? Premium area. So let's just leave the feed and then go back to 15 minutes. And my chart is looking a little bit too messy. All right, so yes, did we have the break of structure? Yes, we do in this area. But now because you have a higher time frame premise and then your idea and understanding of buying at discount, selling at premium could have saved you from taking this loss. Because yes, we had the break of structure. If you're trying to take a sell here, anywhere in this area at all, anywhere, maybe your stop is here, maybe your stop is here, maybe your stop is here, maybe your stop is even 20 pips. Anywhere, yeah, you would have taken a loss. Boom. Yeah, so you'd have actually taken a loss on that. Okay. Yeah, but then price did not get to, let's assume it happened here now. I can now begin, oh, that's gotten to 50%. It can begin to reject. But this this has not gotten to 50% yet. So that could have saved us, some and loss. And then price was very tricky. Why did I say it's tricky? What can you see here? What can you see here? I can see equal lows. This is smart money. This could have actually been one very good reason to take this sell down. Because like, oh, there's money sitting to the downside. He's gonna sell, right? You see, and then you missed out, like this did not play out, and then you waited for price to go back up, like taking a loss. I mean, on lower time frames, seeing how we have this big weeks to the downside, the structure shift and all, you could have gotten a sell down in this area, like an early sell down, from an imbalance on lower time frame, stop above the high. Yes, I'm seeing some opportunities in this area you could have taken to make 1 to 3 quick, 1 to 3, 1 to 4, 1 to 5, 1 to 6 in this area. But then I can go back that far, so we're not going to talk about it. All right, so this Mr. Limit, and now finally price has gotten to what, 50%. Let's see what kind of, so now if you're asking all of this now, was there an opportunity? Yes, there was, but you missed out on it. So you wait. All right. I mean, you've had how many opportunities has price presented so far? 1, 2, 3. There are more opportunities if you go to lower time frame. If you had gone to lower time frame, it would have been like very, very, a lot of opportunities. I see one in this area. Okay, I see one here. I see one in this area also. So this could have been actually be 1, 2, 3, 4, about 4 opportunities here on lower time frames, or even more. And then we have 1 here. And then, so, I mean, even if you took this sell not at premium, but you just took it thinking it's going to sell, I mean, you took a loss, but that's just one loss out of all of these wins. Okay, and our price is now at 50%. Yes, so now what do? We wait. Let's see what happens. Okay, just chilling. What's going on? Woo! Jeez, this is definitely news. I don't want to know. You can't tell. This is news. I'm very sure of this. What time is this? This is 1:30, February 3rd, 1:30. This is definitely, even if Forex Factory doesn't show me, I'm sure this is news. That is definitely news. Let's go to calendar. February 3rd. That is definitely news. February 3rd, Friday. And that is Thursday, February 3rd and Thursday, 1:30. 1:30 GBP. So that was actually GBP news, but gave a very big impact on on euro. Right? The next news was 1:45 on euro. When exactly did that move happen? This was 1:30. So GBP news affected euro, and then the next couple of minutes we had euro news came in also. So the two news pushed euro to the upside, as we can see here, right? Just 15 minutes after we had euro news, and then that took price also to the upside, right? Cool. Exactly. And then the news did the most, right? Sheesh, that was so much. Like, and then you start asking yourself, this is GBP news. How come it affected this? Like, so let's see. Was there a play for us before the news? Because I like to get in before the news. I don't like to just trade immediately. News is out, and then I start seeing bullish pricing. I just enter buy. No, I like to be in before the news. Was there an opportunity? Let's scale to the 1 hour and see. I would personally have played. I would have been anticipating lower pricing into this area. Why? Because I see some liquidity in this area. Okay. And you see this liquidity? Yes. And then this candle was 12 o'clock. So that was before the news. So I would have been anticipating to be in here, stop just down here, and then price activates me before the news. That is I'm in now 1 hour, 30 minutes before the news. And then as price is rejecting, is going my way little by little. Okay, once it's close to news, I'm at break even. Now we've had a case this year where stops were not respected. I don't know. I think it was it February? I don't think it was that far. I think it was last 2 months or so, or maybe I don't know. It wasn't this news, right? Stops were not respected, and then boom, I wasn't trading that day, so I was safe. But then stops were not respected. Even if you had stop loss, the broker closed you at way down. But then how I like to do it is I'm in break even, irrespective of where price is. I'm going to go break even. Yes, slippage. Okay, break even, because it is news time, major news, break even. So if it takes me out, fine. And then it drops, okay, cool, no problem. Analysis was wrong, but at least I'm out. But see, this is what I would have been anticipating. As price is trading down, I'd have been looking to take a buy in this imbalance here to go up. But as we can see, price did not do that. Instead, price played this imbalance here. So if you were going to take this higher one in this area, entry could have been there, stop loss, oh, did this get hit? This is the candle, play this, 9 pip, depending on the entry. So I could have, there is 50. Okay, so 50 level, yes. 8.2 would have been 8 for me. So this is I would have been. On trading view, would have been a win. Well, broker, what do they call it? Spread might have taken you out, right, on this trade. Was it a winning trade? Definitely. But then spread might have taken you out. But if, let's say, you added spread and you made it like 9 pip, cool trade for you, would have been amazing. Understand? But me, I would have actually wanted lower pricing. And then if you draw the fib from the swing low to the high, you are still trading. All of this is what is discount. If you wanted playing here, is discount. If you wanted playing here, is discount. Just that I wanted a more discount entry than this one. But this could have actually played out for you, and then it took price all the way to the upside. So this one, didn't fill me in. So I'm just going to leave this two here. So one did not, price didn't fill one, and then the other one played, and then boom, finally we are heading into what? The daily mitigation candle. You could have anticipated higher pricing. One, because we are, two things can actually happen in this area now for me. Because number one, we've actually gotten to what, 50% of the daily range. It could go lower, and news could be one reason to start to take price down. So I could be thinking, oh, it might go lower. And then another thought, okay, they still have to clear some trend line liquidity. And then we have this liquidity here. Okay, can you see we have liquidity? So we have money to the upside. That is one. So we have liquidity to the upside on the 1 hour time frame. On the daily time frame, we have a mitigation candle that price still needs to mitigate out of. And then we also have a daily imbalance in price. So now, on a scale of 1 to 5, which one has a higher probability of price heading towards rejecting from 50% and going lower, or capture the liquidity resting, mitigate, fill the imbalance? 3 things, and then drop. I think the one higher was okay. Again, you would only be, me personally would only be in on this kind of trade way before news. I'm not going to be in once news has come out, price is beginning to pump, and then I see and then I see all of these confirmations, and then I just click the buy button immediately. No, I would not do that. Buy immediately, right at the heat of the moment, price is pumping, you just press buy. No, I like to be in the trade, stop loss at break even, save myself from anything that wants to happen, and then price goes my way. I'm happy, I'm excited, price went my way. You understand? And then I would, price has filled, this captured imbalance, mitigate 50%. And then you can see it traded a little bit above. What about that institutional? Yeah, you can play it. Yes, you can play this cube also. You can. Yeah, you can play the cube also, stop below the low. It's the same thing. There are different opportunities. Me, basically, I like to, get in using 3 different entry techniques, right? The mitigation candle, the smart money cube, and then imbalance, right? And then I spice it up by, making sure the entries are, looking for bank numbers inside those entries, the 50s, 80s, 20s, 00s. If it lines up with what structure, if it lines up with order flow, everything just together. But then those 3 together, mitigation candle, imbalance, and then smart money cube, right? And then this is it. So price filled, all of this, and then we had like a 1 to 17. But I've been a good day if you were not stopped out, right? But if you were stopped out, you'd have been sad, and then see how prices go. And then if you decided to remove stop loss right before news, you need cane, serious cane. All right. Okay, so this played out. Hazy went all the way to the upside. So now have we got into the daily? Now we're finally up there. Yes, we're up there now. All right. So how many opportunities did we see? Let's go back to the 15 minutes time frame. Okay, so we had 1, we had 2, so 2 opportunities here, 3, 4, 5. All right, and then some you missed out on 1, 2. You caught 1, 2, 3. Yeah, so yeah, good, right? All the way to the upside, and then going back to the daily, the highest point you should not get to, right? If it's going to continue being bearish, maybe we should not have candle bodies close above the side. Let's see, did that happen? Aha, look at this now. Look at this. Look at this. Smart money can be funny. Okay, boom, they closed above that. Now we could be thinking that's a break of structure, right? But then we're going to discuss this on the next market structure call. As you can see, he broke below, like he did not respect this. He didn't. All right, so we'll talk about this in the next. I can see equal highs. I can see this liquidity swept it, and then all of that. We'll discuss it in the next market structure call. All right, we finished early. This is 11:08. We still have about 22 minutes left. Yes. So we have 22 minutes left. Okay, so do you have any question for me? Let me take questions now. All 20 of you on the call. Do you have any question for me? I might not be able to send the recording right immediately because I'm just going to prepare and go to the hospital now. All right, so I would upload it when I'm done, like when I'm back. Okay. All right, so any question for me? I have a question. All right, what's your question? Type your question. About market shifts in structure. Okay, what's the question about that? Market shift in structure. That's new. All right, what question do you have about? Let me annotate. Sure, you can. What time frame should I go to? Daily? What about the imbalance up there in the daily chart? Yeah, price could get there. Could. I mean, it did get there. Price got there. Oh no, it didn't. Sorry, came just very close. I mean, we could be anticipating. Obviously, we could be anticipating this area as additional targets. But looking at market structure, it shouldn't go below this high. But then, do we have to? You will always have targets everywhere. You understand? You will always have target. Look at this. This is not an imbalance. This is an imbalance. The price did not get there. Is this not an imbalance? This one, this is an imbalance. Price not get there. There will always be imbalances everywhere. You understand? But then this one, price came for this imbalance here. I remember this trade. very well. I was a part of this move. I had my entry this year. This was where my entry was on this trade down here. And it was during March, during our first boot camp. You guys remember, right? March, February. Oh, February. Was this? Yes, was this was the entry. Yeah, price rejected from this institutional candle. I remember when we were all looking to buy from here, almost everybody, all smart money traders in OG Capitals, IM Academy, all the educators, many of us were actually looking to buy from this institutional cube here. And price gave us a play. You understand? I remember a lot of educators posted this signal on the higher educational, signal app. And then, we all took this. Some people took profit along the way and, but then, yeah, I mean, it's good to look back at, some charts, price action and be like, yeah, I think we saw this before it played out. All right, what's your question, fam? You want to annotate, aside targeting imbalance on trending market, what other areas do you target? Liquidity. I target liquidity. That's the two. Liquidity, imbalance. That's the two. Nothing more for me. Liquidity, imbalance. I don't target 50 levels. No, I use that as entries. I only target imbalances and then liquidity. Okay, I don't even target institutional cube. No, just liquidity and imbalance. How do you confirm reversal of market structure? When it breaks structure, that is it. When market breaks structure, that's a structure shift for me, and then might begin to go to the upside. That's it. Nothing more. All right. So well done. What's your question? I can see you drew something on the screen. Barry J. My question: after price took the low of after price took the low of the daily. Yes, you went to 15 minutes to look for buy. Is it too far? Because most times I tried it hit her sell, but should 1 hour preferred for after daily low? It depends. Okay, the same price action you would see on the 1 hour, you will most likely see it on the 15 minutes. It's the same thing. And if that 1 hour is not going to hit, it's not going to go in your anticipated direction, the same 15 minutes will not also go. It's the same thing. But the fact that it broke structure on the 15 minutes, it also did on the 1 hour. And then it played out. But if it doesn't, if smart money still wants to go lower, both 15 minutes, both 1 hour, both of them will hit stop loss together. With what I annotate, will we consider that a break of structure? Lower low, lower high, lower low. This is where we have the break of structure for me. Okay, this is where we have the break of structure for me. All of this is just structure within the structure that is calling for bullish price action. And you could trade structure within the structure, but confirming the structure shift entirely would be after this low has been taken. But then you can see our price is going towards that area in a bullish form. You could anticipate to take buy opportunities in this area to go to the upside. Yes. No, I don't want to talk about I don't want to discuss trade idea presently. Okay. But EU present price action, EU GU present price action, I still feel like where we are today in price. Let me just delete all of this now since we are done, and then go back to where we are today. Okay, and then go back to the 1 hour. Yes, where we are today, I can see it was a 5 minute entry I had today, and can see it's playing out perfectly. So my entry was at this imbalance here, and then the price is playing out. Why? I still feel price is going to go up into this area. Price is going to get here. You see this liquidity just resting in this area. I was surprised as to why, smart money did not take it out with CPI news yesterday. Okay, you see this morning just resting in this area, liquidity. Yes. So we might still see price come here. And I did this analysis, looking to go up because of the dollar index, right? The dollar index on the daily time frame. Can you see this liquidity here? Yes, there is money resting here. So CPI did not take it out. Instead went up, okay, and then filled. I remember giving out this area for a sell, right? But looking at this liquidity, that was one of the reasons why I took that buy on EU this morning, because I was anticipating that we might begin to see lower pricing, maybe to this area. Because if we go to the daily, a higher time frame premise, what am I seeing? Okay, I can see this liquidity here. Go to the weekly, I see this what? Imbalance in price. So I'm thinking price created liquidity and then rallied up. We've had cases like this, like similar cases like this across what the indices. Let's check the indices. That is the Nasdaq, right? We check the Nasdaq on the daily time frame. That is why, we had what? Equal lows in this area, price rallied up, dumped. We had equal lows in this area, price rallied up, and now it's dumping also. Okay, because I actually saw this before it played out. When I marked out this imbalance, I was anticipating lower pricing from there. We have liquidity here. We have this. Okay, it's just repeating itself over and over and over and over again. Okay, so when I saw it on the DXY, like, okay, I think it might go to the downside. That was why. Now I'm not in, I've taken profit. I took just full profit at 1 to 3, and that was it. But do I still think it's going to go lower? Yes. And if truly is going to go lower, there will be more opportunities. I know that. And then for EU, higher pricing. So if dollar goes down, EU goes up. That's why I bought, right? And then as a 5 minutes entry, let's go to the 5 minutes. I'm going to do the video on it and then send out later. Okay, I'm going to do a video on it. So let me not just talk about it. Yeah, that was why I was buying, because I was seeing I am pricing from them. Yes. So you said you don't target institutional cube, only liquidity and imbalance. Is it only when you tend to trade against the overall trend? I mean, even if I'm trading with the trend, or I'm trading against the trend, I do not target institutional cubes as targets. Price can get there, but I only like imbalance and liquidity. Yeah. But then for entries, the cube is included. You understand? Yeah. When you have a structure zone, but liquidity is not in alignment. For example, I have H4 lower high, but on top of lower high is equal highs. Should I still take the trade? No, you stay out, you wait, because price could capture the liquidity. Yeah, price could capture the liquidity. Exactly what you said today was what happened in this area. Yeah, I would click on it. So there are two ways. Okay. This is volatility 10-1S on the 4 hours time frame. I can see your markup. We have this low, the high, the low, the high. We have equal highs, and then institutional cube, right? Now, in cases like this, let me quickly go to VIX 10-1S to explain this. So VIX 10-1S quickly. All right, so this is VIX 10-1S. I remember calling out a trade on this. I don't know how many of you actually took that trade. We're targeting this liquidity. Just like I said, my target is always, oh, did I? Oh, I opened jump 10. Oh, thank you, Mama. All right, because I was already looking like the price actually is looking different already. All right, VIX 10-1S, VIX 10-1S. All right, this is it. Yes. All right. So this is the daily time frame. Okay. All right. So price is really, really, going lower to the downside, right? Do we have equal lows? Let me see. Yes. So now I still see this going lower. Definitely, definitely sure this is going to go lower. Now, scale. Oh, just 1 hour chart. Okay, no, this is a daily chart. And then now your markup is on the 4 hours. So on the 4 hours now, I see what you're saying. Now, if I'm going to be honest, this was the low and this was the high. Price extended way down. All right, let me go down time frames more. Let me go to the 1 hour. I know this is going to sell, but now I don't want to rush it. Okay, that how do I put it, that you see the liquidity, price is close to the liquidity. It's going to sell. I need to be a part of this. Just calm down. Okay. Yeah, it is close to the liquidity. Everything is looking like it's set already. Just be patient. Okay. Yeah. All right. So yes, what do we see? I can see pool of liquidity in this area. There's a lot of liquidity here. See this? This area. I mean, this has a lot of liquidity to the upside. So now, what do we do in situations like this? Now, if we check clearly now, look at this 1 hour structure. It's giving us some bearish confirmations, right? We have this lower low, we have this lower high, and now we have this lower low. Now, if we take out the liquidity away, and then look at this structure, we can see that this is the top range, this is the down range, and then price should retrace and then sell down. That is it. Now we have liquidity to the upside. Now you could take this sell, but now you know the reason why it's going to hit stop loss. Structurally, price is going to the downside. Are we in line with structure? Yes. Are we in line with range? Yes. Are you taking your sell at a premium? Yes. Is there liquidity as target? Yes. But now, if this trade is stop loss, why? We already have our answer. Because there is liquidity to the upside, and smart money can decide, they could come into this imbalance here. You see this imbalance? Yeah. Price can get there, this area, and then reject. Yes. But now what happens if price doesn't do this? Because they want to come for this liquidity. Price can do something like this and still drop to the downside. Because now if you are looking at which of the liquidity is bigger, the daily liquidity, and then we have the 1 hour liquidity. Yeah. So there's liquidity now to the downside, there's liquidity to the upside. So what I would suggest you do is don't go in, if you want to trade this, don't go in with a limit order. Okay, you can just wait for price to come into this area and then look for that. Since this is the 1 hour time frame, you can look for that distribution on 5 minutes, 3 minutes, 2 minutes, 1 minute. You understand? And you can, that way you can, catch your 1 to 3 quickly. And then if it decides to go back, I mean, it's not every time it presents 1 to 3, but let's just anticipate that that's what's going to happen. Okay, because they can come into this imbalance and then drop price to the downside, or you just have to be open, okay? Or they come and capture this liquidity. Now, if they come and capture this liquidity, are you going to take a loss? Yes, you're going to take a loss. But then you know why you're taking a loss. Because now, I will not say they won't take out this, they will take out this. I don't know. I'm just going to wait to see what happens. But if I'm going to trade it, how will I trade it? I will wait for price to come into this area and then look for the distribution and then take the sell. That way I am more conservative. And even if after being so conservative, it's still with stop loss, then okay. You understand? So just wait for price to come into this. It is a very good trading opportunity. Understand? For those of you that trade with 10 is keep an eye on this area also. We have this big liquidity to the downside, right? So let price come into that area and then we can look to take, sell opportunities. Right? And if we draw the fib, from the swing high to the swing low, this is very good, right? This is at 618. The open is at 618. That is, very good area for price to reject. All right, so just let's see what happens in this area. Okay, so guys, just keep an eye on this area. Okay, who knows, maybe we might be having some kind of harmonics forming, maybe something like that. So we just wait and see what happens. All right. Yes. So any more questions for me before this is 11:24. I have 6 more minutes. Let me know if there are no questions. Just say no questions. Okay, so we can proceed. I'm always a liquidity city. Or if there are no questions, just let me know if there are no questions. Nobody's typing. All right, no question. All right, good. All right, so no question. All right, so Thank you guys for hopping on. Enjoy the rest of your day. Okay, I will drop the recording once I'm back. All right, have a nice day. Bye bye.